It's the 298th Monetary Policy Committee meeting of the Central Bank of Nigeria, where the governor, Olayemi Cardoso, is set to announce its latest decision on interest rates.
Of price pressures with attendant adverse impact on income and welfare of citizens. Members, therefore, agreed unanimously to remain focused in addressing price developments. While food prices remain a key contributor to the uptick, members commended the efforts of the federal government for the improved security, especially in the northeast of the country, which would likely improve food production. The committee also noted the role of rising energy prices on the general price level due to its impact on factors of production. The recent increase in the price of premium motor spirit, PMS, has also impacted the cost of production and distribution of food items and manufactured goods. The committee was optimistic that the full deregulation of the downstream subsector of the petroleum industry would eliminate scarcity and stabilize price levels in the short to medium term. Members thus reiterated the need to strongly forge ahead with the deepening collaboration between the monetary and fiscal authorities to ensure the achievement of our synchronized objectives of price stability and sustainable growth. The committee noted the improvement in the external sector, reflected by the increase in the current account surplus, enhanced remittance and capital inflows, which have impacted the external reserves positively. This, therefore, suggests that key policy measures by both the monetary and fiscal authorities are yielding the desired outcomes. Members, however, expressed concern over persisting exchange rate pressure, reflecting continued high demand in the markets. Consequently, the committee urged the bank to explore measures to boost market liquidity. Members noted with satisfaction the continued resilience and stability of the banking system, despite significant exogenous and endogenous headwinds. Key financial soundness indicators, such as the Capital Adequacy Ratio, CAR, Non-Performing Loan Ratio, NPL, Liquidity Ratio, LR, amongst others, remain strong. The MPC, however, called on the bank to maintain its close surveillance on the banking system to sustain compliance with regulatory threshold and continued health of the industry. The MPC acknowledged the efforts of the bank in deepening financial inclusion towards improving the transmission mechanism of monetary policy to enhance policy effectiveness. From the foregoing, members thus focused on the optimum policy choice to address the uptrend in price development, stabilize the exchange rate, and anchor inflation expectations appropriately. Key developments in the domestic and global economies. Data from the National Bureau of Statistics showed that headline inflation year-on-year rose to 33.88% in October 2024 from 32.70% in September 2024. On a month-on-month basis, it also rose to 2.64% in October 2024 from 2.52% in the previous month, with both the food and core components contributing to the continued rise in headline inflation. Food inflation rose further to 39.16% in October 2024 from 37.77% in September, while core inflation also rose to 28.37% in October 2024 from 27.43% in September. The MPC, however, noted the moderation in the prices of farm produce and commended the efforts of the federal government in driving increased productivity in the agricultural sector. The recovery of output growth was sustained, with real GDP year-on-year growing by 3.46% in the third quarter of 2024, compared with 3.19 and 2.54% in the preceding and corresponding periods, respectively. The growth was driven by both the oil and non-oil sectors, with a notable contribution from the services sector. The non-oil sector grew by 3.37% in the third quarter, compared with 2.80% in the second quarter, while the oil sector grew by 5.17% year-on-year, compared with 10.15% in the preceding quarter. The external reserves rose marginally to 40.88 billion as of 21st November 2024 from 40.06 billion at end of October 2024, available to finance 17 months of imports. At the global level, the IMF projects growth at 3.2% for 2024 and 2025 from 3.3% in 2023. Risks to this outlook, however, include ongoing geopolitical tensions, such as the lingering war between Russia and Ukraine, as well as the crisis in the Middle East. The deceleration in global inflation is expected to continue into 2025 and move towards the long-run objectives of key central banks in the advanced economies, albeit at a slow pace. This, however, faces a growing risk of reversal as talks of trade tariffs heighten following the outcome of the November 2024 United States elections. In view of the above developments and identified risks, members reiterated their commitment to price stability as the bedrock of a thriving Nigerian economy. The next meeting of the committee is scheduled to hold on the 25th and 26th of January 2025. Thank you.
Thank you very much, Mr. Governor, sir. That was communique number 155, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olayemi Kadusu. We'll now take questions from members of the press. Please state your name, your medium, and ask your question. Do not ask more than one question, please. Thank you.
Very good afternoon. Very good afternoon, everyone. Well, my question is, with inflation at, okay. The name is Musa Walker. I'm with MTA. My question is, with inflation at 33.88% in October, up by 1.18%, what steps will the CBN take to meet its 21% target for 2024? Thank you.
Thank you. Thank you very much, Musa. Let me first say that the central bank is resolute and committed to continuing to fight the war against inflation. There's no going back on that. And as I have said at previous fora, we are going to deploy everything in our arsenal to ensure that we are able to tame it. And of course, this entails the return to orthodox monetary policies, the return to orthodox monetary policies. So I think it is important to state that upfront. There's no going back on that. Now, it's also important for people to understand that there's a time lag between when you implement policies and when they have impact. And that time lag, quite frankly, can be, anything up from 6 months to 9 months to a year. It all depends on what you're doing. Our own perspective is that we expect to see greater results in the first quarter of 2025. And you can do the math from the time we started tightening. So we expect to see this in the first quarter of 2025. In addition to that, we are working very assiduously with some of the relevant agencies to ensure that those structural impediments are handled appropriately. And as obviously some of these things themselves take time, supply disruptions and infrastructure issues, which we all know, and a whole host of different things. And ours is to collaborate, to advise, and to help such that at least we begin to make that transition to a point where these issues are adequately dealt with. On our own also, we are doing what we can within the limits of our market, and in particular the foreign exchange market. And by that, I refer to the fact that we appreciate that many times some distortionary elements come into a market, and that is why we as regulators, that's what we are there for. So we are ensuring that we're on top of the game and that the foreign exchange market operates at its most optimum manner, and so it will reflect the true value of the currency, and of course you have price discovery. Then finally, something else I think is important to say, and that is that if you, and for many of you, many of the press, many of the members of the press who were at the World Bank IMF meetings recently, you see those fora also offer an opportunity to interact and to exchange different parts of the world. And really and truly, if they think those people that attend should get out of that, it is that. Talk to people in other parts of the world, see how they themselves have dealt with some of the challenges that we are facing. And you find out that we are not alone. We are not at all alone, and that the road of travel is similar. These things take time. You've got to stay the course and you reap the benefits. And for those who, again, have made it their duty to monitor how different economies handle these kinds of problems, if you talk to them when you visit these kinds of events, you can see that the expectation is that Nigeria definitely is on the right path and will continue to be as far as inflation and foreign exchange management is concerned. So I think the bottom line of all this is that these are all time-bound issues, and do expect that in the fullness of time we will begin to see the reaping, the greater reaping of some of the benefits of the great tightening and the sacrifices that everybody in the country has made.
My name is Mark Zibon from Leadership Schools. So there are reports already that the foreign reserve has risen, for example, like you said, to $40.88 billion. That's a good achievement. And then the foreign remittances over $600 million. But I want to know what would be your reaction or your response to those who are concerned that despite this rise in foreign reserve and the foreign remittances, that the naira exchange against the foreign other currencies, especially the dollar and the pound sterling, is still very weak. What would be your response to that?
Thank you very much. Yes. Okay, first and foremost, maybe I should unpack that question a little bit. Diaspora remittances, absolutely, and I would say that they didn't just go up on their own. They went up as a result of a deliberate policy on the half of the central bank, and I've said this in previous fora, to address all the bottlenecks that were in the way of diaspora remittances coming into the country. So that has happened and will continue to. Then, of course, the whole issue of reserves, that yes, indeed, the reserves have gone up. The reserves have gone up. And again, we should bear in mind that the process of getting us to where we are with reserves has been a long, tedious one. And if you, those of you who can recall, when this particular administration started, we had a lot of problem with reserves. We had relatively lower reserves, early 30s, and we had a huge backlog. And happily, all those things are behind us now. They are behind us. And I think that is a clear indication of the fact that the policies that have been used have begun to bear fruit. They have begun to bear fruit. I mean, we can talk and talk and talk as much as we like. If the numbers do not play out in line with what we are saying, then really you're free to say it hasn't worked and you're a failure. But that is certainly not the case here. However, and it's very important to make a distinction here, and to reiterate the fact that reserves are there for a multiplicity of different purposes, okay, not least of which is to create buffers in the event of unanticipated shocks. So they are not there to simply whittle away. They are there to, be used to more or less defend yourself where that becomes necessary. And when we talk about shocks that are not anticipated, I think we can see how the global economies are going these days, and that's why we spend time talking about this anytime we have an event like this, that there are so many uncertainties that you never really know where things can hit you. And a classic case in point, quite frankly, is COVID. Nobody anticipated that COVID would come the way it did, and the effects of that everybody saw. Then I also want to make the distinction between the value of a currency, and the stability of a currency. I think they are two separate things. They are closely interrelated, but they are two separate things. Okay, for us, we always talk about the stability of our currency and stability of prices. And we will never tire of talking about it, because that is the reason for having the Central Bank of Nigeria. The Central Bank of Nigeria is there to provide stability. Stability helps you to plan. We do all we can with all the tools available, and there are multiple tools, including ensuring that, people who are trying to game the system stay away from it, and sanctioning those with bad behavior, a whole host of different things, okay, to ensure their stability. Now, if you look and measure stability between June and now, you find out it has been stable. It has been stable. The currency has been stable. Now we go to the value of a currency, okay? And again, this is something I've made reference to in various fora. And that, quite frankly, isn't determined by any one entity. Less the central bank, by the way, because ours is to determine, to manage volatility and to manage how the currency pans out and to keep stability and price stability. But you cannot get away from the fundamentals of an economy in determining the strength of a currency. You cannot. You can wish it away, and it's not going to go anywhere. At the end of the day, all the various indices that go towards determining the strength of your currency, demand and supply, balance of payments, and I must hesitate here and say that if you listen to my communique, very positive balance of payments uptick in the recent quarters, very positive, and that's a sign of good things to come if it continues at that level. But those are the things, really and truly, that at the end of the day, they determine the value of your currency. Fiscal deficits, and things around that nature. And of course, something that we should never take for granted, our own appetite for foreign goods. And I think this is an excellent opportunity for us as Nigerians, okay, to look at our economy and to say, let us have more interest in buying local goods and shunning importation. And none of this is too small towards helping to shore up the value of the currency, which is something that I know everybody wishes for. And by the way, as we continue to diversify our economy and we continue to have import substitution policies and trade policies that encourage our own products, then the issue of relying on foreign goods becomes less of an issue. And therefore, the level of your foreign exchange rates becomes less important to you. That hopefully is something that will happen over a period of time.
Governor, sir, my name is Vanguard.
Vanguard?
Yes, sir. My name.
Okay.
At your meeting at the last World Bank and IMF meetings in Washington, you had side meetings with Nigerians in the diaspora and the NGOs. It was boosting remittances. We want to know that up till now, Nigeria is still on the gray list of the Financial Task Force, Action Task Force. And we want to know what efforts you are making to pull Nigeria off this list, because it is very key to capital commitment. Thank you.
Sure. Thank you very much. Good question.
There you have it, the 298th meeting of the MPC, where they are talking about policy measures that they have taken in the past 2 days. I'll just tell you some of them, reiterate them actually. The first one is to raise the MPR by 25 basis points to 27.50% from 27.25%. And also they retained the asymmetric corridor at plus 500 minus 100. The MPR around the asymmetric corridor is retained. Also the CRR is retained at 50% for commercial banks and 16% for merchant banks. And finally, the liquidity ratio was also retained at 30%. Well, to a very large extent, analysts had priced in a 25 to 50 basis point hike. And of course, my guest on the show this morning talked about a 25 basis point hike. So, I mean, she was right. Well, for more on this, I am joined by Segun Shokwiton, Principal Partner, Woodridge and Scott Consulting. Thank you so much for joining me in the studio today.
Thanks for having me.
It's a pleasure to have you.
Always a pleasure to see you.
Absolutely. All right, I'm also joined by Dr. Femi Egbeshola, the President of Small Business Owners Association of Small Business Owners of Nigeria. Thank you so much, Doctor, for joining us today.
Thank you for the opportunity.
Okay, Doctor, let me begin with you. I mean, what was your expectation? I definitely believe you were not expecting a rate cut.
Well, really, our expectation really is to see an hike in the interest rate or in the MPR because the governor said it over and over again that for the coming period, we are going to continuously see increase or hike in MPR. But the question is, do we agree with his submission for the increase? For us in the private sector, for us in the real sector, I think we do not agree with this. And the reason are obvious. Obvious in the sense that we've not been able to see real change in the economy. We've not been able to see improvement in the well-being and livelihood of an average Nigerian. And governance is not just about mopping up money. It's not just about being able to pay debts. It's also about the livelihood of the average Nigerian. It's about ensuring that the business community is protected and be able to do business and grow and scale. It's also about making sure that Nigerians are able to afford the basic goods and commodity that will keep them up and above the waters.
Right. I think the CBN governor sort of noted some of those things you talked about, because he was talking about the slow transmission. And not only that, I think he also mentioned something about structural impediments that are being handled. Let me talk to my guest right here. I mean, the CBN governor talked about these impediments that are being handled. What do you make of that?
Well, I mean, those impediments are significant. And when he says they're being handled, I really wonder what he means. Because it's one of the problems that we have in our economy, the fact that the lagging effect is more significant in Nigeria than you would have in other advanced economies. Typically, if you look at maybe countries like the United States, the UK, the EU, when the CBN makes pronouncements, for example, on their policy rates, the impact is felt 2 to 3 months. So a lot of the policy decisions, lagging effect usually is 2 to 3 months long. In Nigeria, like the CBN governor says, it can be up to a year. And a lot has changed in a year, right? So you pretty much continue to chase your tail, as you apologies, as you continue, you pretty much continue to chase your tail, because as the impact and the result of your policies are beginning to be felt and captured in the data, the conditions on the ground have moved again. So you have to then respond. So those structural impediments that it talks about are significant, and I would have thought that the energy of the government would have been focused on removing those impediments. One of them is corruption. It's a big...
The CBN governor didn't mention corruption.
He won't go there. He's not going to go there, but it's one of the major reasons that you don't see a percolation of policies into the impact on the lives of Nigerians, because a lot of things hang somewhere in the middle. They never quite get to the base, right? So if we are going to see our economy improve, we've got to take away things like corruption. We've got to improve our infrastructure, the infrastructure base. We've got to take care of security. Those are the things he's talking about. So those things are on the fiscal side of things, and we haven't seen enough of action in that regard. So until we begin to, I'm afraid we'll just continue to reel out these policies, reel out the textbook solutions, and we will not see commensurate results. That's, yeah. All
right, so Doctor, let me come to you now. We know the CBN's trade-off definitely is output and growth. So I'd like you to, help us talk about some of these things really. What are the impacts of these hikes? What has been the impact on your business or on businesses generally? Because, you're in the private sector, so talk to us about that.
Well, really, as the guest in the House has said, our issue is not just about just trying to arrest inflation by hiking MPR, because beyond corruption, we also have a lot of mismanagement in the system. One thing is to be saving money, another thing is, on the other hand, wasting money in the name of mismanagement. Coming down to the issue of how it impacts us in the real sector, we are very heavily impacted, very negatively impacted. This has shrink our businesses over time. We've not been able to do business as usual again, because for one thing, lending has become very difficult. It's now very, very, very expensive to get funding from the banks, and even the banks are now averse to giving out money to the real sector because of the fear of repayments. And this is actually happening now. Many of those who have borrowed are unable to pay. So we have a lot of bad debt and default when it comes to payment of loans. Again, too, because it is also shrinking the economy, the average consumers have it difficult now to have disposable income to buy what they need for their homes and for their well-being. And for that reason, it results in low sales for us. And this low sales has reduced our profitability in a large way. And for us to be able to cope, we have to now begin to downsize our staff strength. And when we begin to downsize staff strength, it also results in unemployment, which leads to poverty and indirectly also leads to insecurity in the system. We also now have to contend to begin to meet sources of funding outside the banking system, which is not really easy to come by. Again, also, because like the CBN governor said, he said that there's need for us to begin to look at buying made in Nigeria products. That we have been trying to do as businessmen, to improve on our packages, improve on our standard, so that Nigerians can buy. But the unfortunate thing is that even these imported products are coming cheaper than ours, and that makes us less competitive. And one of the reasons why it is cheaper than ours is that they have more favorable business environment in their country, and the inflation rate here is eating deep into our working capital, making it very expensive for us to run business. And again, you say hike in almost all the indices that we use for our production business, electricity hike, fuel hike, and all of that. All of these are pushing businesses to the edge all at the same time. Again, too, government is doing some form of intervention here and there to support businesses, but you discover that this inflation has eaten it up over time. When government promises to do an intervention, before that intervention comes, inflation has taken the impact or the expected positive impact away from us. And then we feel that having done this again and again and again, there should be other ways of addressing this issue beyond just raising MPR. Yes, we understand that the gestation period for policies takes a long while to happen, but then the sustainability of businesses, the sustainability of lives is important and should also be on the front burner of government to ensure that cautions and soft landing are provided, alternatives are provided for everyone in the system, as much as CBN wants to track inflation, as much as they also want to ensure that the economy is sound and is able to compete globally.
Right, let me come to you now. He talked about something, unemployment in the real sector. But of course, we have the unemployment figure printing at 4.3%, which is an improvement. So what do you say about that? Even GDP, 3.46, also an improvement.
I think that unemployment number is one of the structural impediments that I also should mention.
Oh,
when
okay.
the CBN talks about structural impediments, one of the problems that we also have is a paucity of data, and the fact that the official...
You wouldn't call this paucity of data, because that's data from the
I
MBS.
agree, but in fact, that's my point. The fact that the official data gathering organ of the government is churning out what many of us consider as misleading data.
You should also consider that there was a change in methodology which was announced.
That's the point. So because the change in methodology fails to capture the local realities in Nigeria, especially income levels. So you cannot define a person that is working for 1 hour in a work week in Nigeria as being gainfully employed, because 1 hour wages in Nigeria will not buy you a bottle of water, right?
That's too much. It's actually, actually.
You know, exactly. So if you translate that to other economies around the world, another thing that you have to bear in mind is that that person that is working for 1 hour has absolutely zero safety nets from the government, right? Whatever safety net we have in Nigeria is social. It's from, all of family and friends.
Black
right?
tax, some call it.
Yes. So, but if you go to other economies where they use 1 hour per week as a measure of employment, they've got safety nets. Even the 1 hour wage will still, if you convert that to Naira, at the current exchange rate, is almost a month's salary in Nigeria, right? So that number is misleading. And that is an impediment for policy making. Other impediments, regulation, the fact that Public Procurement Act, before you can translate government policy into action, typically you will need 9 months to a year, starting from the adverts, and all of that. And you could go on and on. All of those issues are significant problems that need to be dealt with before we can then start talking about, the gains and all of that. The GDP figure, as soon as I saw the GDP numbers yesterday or the day before yesterday, I thought we already knew that there was going to be a hike, but I said, oh, well, this is further validation. Unfortunately, if you disaggregate the GDP numbers, you will see very interesting trends. For example, a lot of that growth is driven by the oil sector, where there is hardly any impact on the average Nigerian walking on the street, and the financial sector, banks and insurance companies. If you look at the real sector, where my colleague, for example, operates in, the small business owners, the manufacturing sector, people that produce personal care products, consumables, food, beverages, and all that, they're either shrinking or they're not growing, they're flat, right? So that's a problem that number, 3.46 growth rate, will not show you. And as a policymaker, you've got to look at that in trying to determine where to go next. So our policy making has got to be more targeted than what we're seeing. And I've always advocated, and I continue to say, as often as I have the opportunity, that we've got to think local, we've got to come up with our homegrown solutions that are not dependent on this. It's not that this policy approach is ineffective. It's that for our local reality, we have to do more. So just hiking interest rates, for example, is not going to curb inflation, because inflation is not only demand pull. It's not because there's a lot of money pursuing to few goods. That's not the major driver of inflation. It's a problem. So when you increase MPR, there will be an impact over a long period of time. But the fundamental drivers of our inflation is cost push. It's the fact that we've devalued our currency. It's the fact that food is not available. It's the fact that there's so much insecurity and productivity is lagging. So what are we doing about that in very deliberate terms? Look at the way the MPC, because it's a structure, the Central Bank of Nigeria has got this system that has run for decades. And all the CBN governor has to do is plug into that and continue to run. Where is that kind of systematic approach to governance and policy making on the fiscal side, where every week, every month, every 2 months, or every quarter, or whatever it is, we're having briefings from maybe the Minister of Finance or the Minister of Trade and Investment or Minister of Budget and National Planning, for example, to tell us the policies that were rolled out 2 months ago and what happened, what were the outcomes based on data that we achieved, and what are we doing next to move to the next level. That structure does not exist on the fiscal side, as far as I know. You have random briefings every now and then at the whims and caprices of the operators of governance in Nigeria. You can't run an economy like that. So while the monetary side, when I listen to the CBN governor, I agree with a lot of what he's saying. It makes a lot of sense.
I saw your note to some of them.
Yeah. For example, talking about stability versus value. It's absolutely critical that you have stability. I would have wanted that stability to be achieved at a far lower exchange rate, well below 1,000, which will speak to value. But he's right. Stability is important, so he's doing a decent job, I would say.
Talking about stability,
but the fiscal side needs to be better, needs to do more.
Before we get to the fiscal side, talking about stability, do you think the exchange rate has really been stable, really, looking at the month of November?
Relatively. So now we're not, if you look the last 3 months, we've been hovering around the 100 naira, 150 naira window. So we've gotten to 1,005, 1,550, 1,650 now. That's about 100 naira. In a 3-month period, it's not great, but at least if I was a manufacturer and I was planning, to import some of the factors of my production, an invoice that I issued 3 months ago would not have been rubbished by a wide change in exchange rate 3 months later. So that stability for me, and it's a good thing, but we need to achieve stability at a far lower exchange rate without affecting accretion of the reserves. So those issues, there's a lot of challenges still to deal with. I love the fact that the reserves are growing, but does that mean, is it a zero-sum game? Do we have to grow reserves while releasing the exchange rate to float freely on market vagaries?
Well, he said we need to have a buffer. So it's the buffer we're having.
Absolutely critical to have that buffer.
So what are these other things, other measures that can actually, help the naira to actually appreciate significantly? I think you've been talking for long. Let me go. We'll come back to that. I hope I'll remember. Dr. Agbeshola, I hope you can hear me. Okay, we'll come back to him. So let's just go ahead.
Yeah, so one of the things, for example, that I thought would have been more energetic about is the diaspora remittances. We get $20 billion, rough average, every year of diaspora remittances into this country. Guess what proportion of that comes through the official markets? Less than 5%, right? You get about 2 billion, 1 billion into the official markets from diaspora remittances. Why? What can we do to widen the volume of funds that come into the official market from diasporans? Because, $20 billion in a year, you are competing with our total forex revenues from oil, right? So it's significant. So why are we not pursuing that with more energy,
but
with more dedication?
the CBN actually put out some measures recently to
it worked.
Exactly.
And it worked. It's grown. But I'm saying we can do more. As we speak today, if you still speak to the average Nigerian that lives abroad, whether it's in the US, the UK, or in the EU, or wherever, China, they have alternative channels of sending money home. They don't send it through the IMTOs. They don't send it through the banks. They still have this, person-to-person networks and all of that, how, to send their monies home. We need to deal with that. And the reason for that is that the exchange controls are too tight. We make it difficult for people to access these funds if you are going through the banks. As I speak to you now, it's literally impossible to take cash, dollars, pay into your account, and transfer it to another dumb account in Nigeria. It's impossible. The policy environment doesn't allow it. The only way you can access that money is to also take cash out. I'm personally stuck in that conundrum right now. So it's crazy. You can't make things difficult for people in terms of access to their monies in the official channels and expect monies to come through, and those monies are desperately needed for liquidity in the market that will drive the exchange rate down, because it's just a demand and supply thing. So the more supply you can get into the system, the greater the value of your currency. So I would have expected to see more of that from the CBN, but we haven't seen that. And there are so many other things that we can do besides just floating the naira and let it find its level maybe at 2,000 naira eventually, while we're growing the reserves. For me, that makes no sense, because as that exchange rate is going up, prices of goods and services because of our import dependency that the CBN governor spoke about will also be going up, which will drive inflation further up.
Again.
So what are we really
a cycle, actually.
It's a vicious cycle that we find ourselves trapped in and cannot break free of. The only way to break free of it is to leave the neoliberal ideas behind, lock ourselves in a room, and find our local solutions. That actually is the answer. We need courage. We need a radical approach to policy making from the CBN and from the government to deal with these problems. Just going about it with increasing interest rates, and all of that, it's not going to work because those are not the fundamental drivers of the problems that we're seeing.
All right, Mr. Shokbito, permit me to just talk to the doctor now. Dr. Gbeshola, if you can hear me, I'd like you to please confirm.
Yes, I can.
Great. I don't know if you were listening while Mr. Shokbito was talking about value and stability. I'd like you to talk to us. I mean, you are playing in the field, seriously. Talk to us. How do these things affect you? Talking about foreign exchange now, whether it's the value or stability. I mean, what's your own story?
Well, unfortunately, I was off the line for some time due to data and internet issues. But still talking about the FX, I really don't know the direction you're coming from, but I want to assume that you're talking about perhaps the value it is having on our system, particularly on our economy. And if it is so, at the moment, the Naira has been stable for some time, like the CBN governor did mention. And for us, what we want really is not just being stable. We want it to be more valuable. We want our Naira to be more valuable because we are competing in a global market. Because of the shrinking of the economy at the moment, most of us who are the MSMEs are no longer just practicing locally. We are now taking our products, our services out of the shores of Nigeria to also compete globally. And that means that we must also have a currency that is highly competitive in the global market that can also bring in a lot of returns for us. And we believe that a lot of metrics needs to be put in place by CBN and policymakers to be able to ensure that what we have now is really in tandem with the expected outcomes that Nigerians, particularly business owners, are expecting. From our own end, that is not the case at the moment. And we look forward to a time where there will be more pragmatic approach to arrest the volatility of the Naira. I loved what the guest in the house said the other time. We need to begin to look at local realities. We should stop importing foreign policies, foreign engagements to solve our local problems. We need to begin to look at local realities. We need to begin to engage local experts to be able to tackle our problem locally and solve our immediate and remote challenges so that we can have a way forward. It's not going to be easy for us to begin to expect Nigerians to get cheaper products in the market in the name of made in Nigerian products, because most of the raw materials we use for our production are purchased overseas. We do not have substitutes at the moment for many of these raw materials. And when we use a low value Naira to go and chase foreign exchange to buy these raw materials, by the time we end up with production processes, it becomes very expensive again. And that's why I did say the other time that many of the imported products are even more cheaper, far more cheaper than a product. And naturally, when the consumer go to the market, you want to buy what is cheaper for you.
Doctor, let me come in here. I mean, looking at what you're talking about, the CBN governor also talked about it, saying something around import substitution and also talking about maybe we need a trade policy that sort of addresses that. So what would be your own suggestion?
Yes, it's good for us to have backward integration to be able to source for local raw materials as input and replacement of many of these imported ones. But it's not a sprint, it's a marathon, and this also needs a lot of government support. It starts to do with research to find out which particular raw materials that can very well substitute for a particular imported one. We also need a lot of equipment to be able to go through that process and a lot of knowledge. This is what government needs to begin to look at and ask to see how they can begin to intervene in some of these areas. And that's why we have many of the research centers we have in Nigeria now. But the question is, what are these research centers, research institutes doing to improve on some of these raw materials so that manufacturers can begin to use them? And of course, we also know that when it comes to the main driver of the economy, which is the SMEs, they have very little financial power. SMEs are not like large manufacturers. They have very little resources, very little financial power.
Okay.
And for that,
All right, thank you so much, Dr. Femi Egbeshola, for your time and your thoughts on this. I wish we could, keep on talking, but of course we have to go now. Thank you so much for your thoughts, Dr. Femi Egbeshola.
Thank you for the opportunity once again.
Thank you, Sam. Thank you so much, Segun Shopito, for your time and thoughts. I know you want to say something in 10 seconds.
Look, there's something that Dr. Egbeshola said that is critical. We have to drive local productivity first, make our local produce goods competitive globally before we can then free our exchange rate to take advantage of exports. We don't have exports and we're free the exchange rate. We're doing it upside down. The cat is dragging the horse. And that is a fundamental error of our policy direction right now.
Thank you so much. I think that's a good place to end this conversation. Many thanks for watching. I am Perpetua Fasome Peter. Up next is news.